So in today's video, I'll be showing you how I made 15 grand in one single trade. And I'll be walking through what are the main steps, main protocols, and all you need is a matured system. Right now, I'm juggling university, I'm juggling social life, I'm juggling my fitness, but I still have time to mature the systems I have right now to achieve these kind of trades. So let's get right into it. So right here you can see Malone and Jamal. Most people are stuck in where Jamal is at right now. 5K funded, only making $150 a month, and they have a sloppy system. They jump around different strategies, not knowing what is perfect for them, rather than sticking to one and maturing that one system. To achieve what Malone has achieved, 400K funded, 10K a month, and a matured system, requires a lot of trial and error. The trial and error requires you to reflect where it went wrong and what is suitable for the systems that you have in place. So most people will want to hop over to where Malone is at right now by having a sloppy system, not having a matured one, trying to jump over and get a 400K funded. That's not possible. Even though you are able to get funded 400K, how long can you sustain making 10K a month, which is 3% of the 400K? How long can you sustain that with a sloppy system? I'll call it luck, but without proper systems, you will not achieve what Malone has achieved here, which is 10K a month consistently, and being 400K funded and sustaining accounts. So let me walk you through the main problems that most traders face. Most traders doesn't have the mindset of knowing that one good trade is better than 10 random scalps. Identifying an A+ setup is probably the hardest thing for a trader to identify. Why is that? Most of us think that most trading opportunities are A+, but without the proper data backing that up, how would you know that's an A+ setup? Without knowing your win rate, how do you know that's an A+ setup? So one thing that I want to walk you through is the ITFT, inability to follow through. Most of you guys have systems in place that you know works, but you can't follow through it because you're not disciplined enough. You will catch every trade you see, every confluence that comes out, you just enter the trade. That's not how it works. The person that goes to the gym, stays disciplined to his diet, stays to what he says, and promises himself everything that he says will easily make 100K a month compared to the person that's lazy and doesn't follow through with what he says. You just lose trust in yourself. Another one is the continuous system refinement. A lot of people find a system, be profitable, and stop refining it. Getting the data is one part, but getting multiple data, years to come, is the key to staying profitable. Most people be profitable for 6 months and they stop refining their systems, and that's not how it should work. The markets are changing over time. A continuous system refinement is crucial to stay profitable in the long term. Managing risk is probably the hardest thing for most people because, look, even though I get 2K loss here, my wins are like 5K. So my wins essentially cover my losses. So risk management is important for every trader. Don't be too greedy, don't over trade, don't over leverage trades, even though you know it's an A+ setup. Because A+ setups are always there for you to find. But risk management is so important for traders because without risk management, you're just going to blow accounts. You're just going to be wasting time. You're just going to blow away your trading psychology. You're just going to feel like shit. Next is patience always pays. Patience always pays. You got to remember that. Waiting for the proper setup. Even though I'm losing 1K to 2K, I make a 5K. I'm still ahead. And I'm only taking 2 to 3 trades a week. So patience always pays. Remember that. Always wait for the proper setup with your systems before getting into a trade. So how would I get into a trade? Basically, it's the market bias and analysis that I'll go through. So first, I'll go through high time frames and see the bias. Usually, we go through different trends, okay? Never fight the trend, number one. We have uptrend, sideways, and downtrend. If you fight a trend and you trade against the trend, you're going to just get slaughtered, okay? So it's always important to go through high time frames to understand where we're at right now. If we're in an uptrend, whether we're ranging or we're on a downtrend. It's very important to understand what trends we're at right now. Without understanding where we're at right now, you're just going to lose trades and you're just going to waste your time and waste your hard-earned money. Another one would be for entries. Key zones and liquidity is so important. Understanding where key zones are, where price wants to go is so important. So key zones and liquidity is so important in a trade. So how to identify them is basically the swing highs and swing lows. So you can see here, these highs here is where price wants to go up and take liquidity. And this swing lows, where price wants to go down, retest, take liquidity and hit to the upside. So you can see here, price came up, did a double top. So essentially we knew that this area was a strong area of liquidity. Came down, where is it going to target? Previous lows. So that's how I trade. I just trade previous highs, previous lows, see the reaction of previous highs and previous lows, and I enter a trade off that. But you can't enter it blindly. You need to find confluences on a low time frame, on M1 or M5. So these are the confluences that I usually trade on: fair value gaps, imbalances, inverse fair value gaps, change of character, break of structure. I just trade on these 5 confluences. By essentially entering a trade, you wouldn't get all 5. You only get 3 to 4 confluences to enter a trade, and that's more than enough. Knowing where price went already on the liquidity and key zones, you already know that price either wants to react off that, but after reacting off that, you need to find the confluences, fair value gaps, imbalances, inverse fair value gaps, change of character, and break of structure. So by combining, knowing where trend is going, key zones and liquidity, and having proper confluences, that's how you enter an A+ setup. So let me break down the entry I made that made me $15,000 on this one single trade. Essentially, it was the same setup that was here right just now. Came down, double top, flood down to the downside. Same thing here, low, high. Price came up, down, retested, and where are we going to target? Previous lows. So this was Asian session lows, and this was London session highs. So to identify it, I just marked out London session highs, Asian session lows. This is where prices will want to go to. I traded this on New York Open, so essentially just swept the London session highs. Market open, swept London session highs here. The confluences for me here was a fair value gap here that got filled. And it was on M1, there was a break of structure and change of character to the downside. So here, it was a change of character and break of structure to the downside. So I entered off this fair value gap here. So essentially, if you follow the model up here, the key zones and liquidity, it's the same thing. See? Market moves the same. Market always moves the same. It's just for you to identify. So essentially this trade, I risked a bit more because I knew this model would work. So I risked around 1.5K to make 15 grand. That's a 10 RR trade, which was quite crazy to be fair. But by following these protocols, identifying trend, identifying key levels and liquidity and confluences, that's how you enter trades. Now let's go to the most important segment of this video, which is risk management. Most people doesn't know where to risk, having a higher risk tolerance, having a lower risk tolerance on different setups. So most people will risk 1 to 2%. That's the same for me. I only take 1 to 2 trades a week, sometimes maybe 3, and you need to have a I don't give a fuck mentality. Like even though you lose, you just don't give a fuck. That's important for traders. Even though you win, you just don't give a fuck either. Like, why are you happy about your wins? I mean, you should be happy because the systems are working, but you shouldn't be overly happy and being so cocky that you think you're the best at trading. You're just gonna lose more money. So it's so important to have a I don't give a fuck mentality as a trader. Just don't give a fuck about winning, don't give a fuck about losing. With this risk management, it builds maturity and shows that you're not gambling. I don't want gamblers. I really don't want gamblers. I want traders who are so focused in their craft, crafting systems in place, knowing that, okay, even though you lose, you knew you were following a protocol and you're not over trading or revenge trading. So as you can see here, there's a different risk to reward. So this is a 1 to 5 risk to reward. Even though you have a 20% win rate on 1 to 5, you're still profitable. Even though you have a 1 to 2 and you're on 40% win rate, you're still profitable. Please save this chart. It's so important for you to have a better perspective on win rates and risk to reward. It doesn't matter how many trades you lose, it's how many trades you win that cover the losses. That's so important. You can lose small and win big. That's the most important part of trading. Losing small and winning big. Remember to not give a fuck about losing and don't give a fuck about winning, because winning is inevitable if you have a mature system in place. So what are the actionable trading takeaways for today would be: trade less, win more. Only focus on high probability setups instead of over trading. A lot of traders over trade because they always want to chase the next win. It's so bad for the trading psychology. You need to know how to identify proper setups, A+ setups in place before placing a trade. If you're just randomly getting into trades, not having the proper confluences, don't know where price wants to go, don't have the proper key zones, you're just going to lose the trade. And you should blame yourself for losing a trade, because you shouldn't be losing trades like that. You need to always respect your risk rules. Protect capital first, profit comes second. Remember, as a trader, you're always protecting your capital. Even though you're trading on a funded, you should always protect your account. Never blow your account for one single trade. It's not worth it at all. I've been there, done that. Respect your risk rules and you'll go so far in trading. Just respect your risk rules. Understand, win rate is important, but you need to know what RR you're targeting. If you're a 1 to 5 RR right now and you only have a 20% win rate, you're still profitable. So you look at this perspective that I've put in here, understand that win rate to a certain extent is important, but you need to see what RR you're targeting. Next is master patience and emotions. It's so important to stay composed while in a trade. You shouldn't be anxious about the trade you have gotten in if you have refined your system so good. Why would you be anxious? You should trust your systems and master the patience to understand what setups to get into. Discipline and control separates consistent traders from gamblers. Staying disciplined and having proper composure as a trader is so essential. If you don't have proper discipline and composure of yourself, you can't be accountable. You're just going to be gambling your accounts away. You're just going to hit stop loss. You're just going to enter random trades after trades without being disciplined. So being disciplined is so important as a trader, and staying composed and controlling your emotions is so important as a trader. So the takeaway for today are these 3 points. I want you guys to go, after watching this video, practice these things that I've said today. Staying disciplined, understanding where price wants to go, mastering your emotions, and respect your risk rules. 4 things are so important for you to actually succeed. Making 15K here didn't come overnight. It came from hard work, refining the systems I have in place to actually make 15K here. Because in the end of the day, it was your systems in place that brought you here. I'm happy for my systems. I'm not happy for the money. I'm actually happy for the systems that I've built for myself that brought me here today. So don't be happy about the money. Be happy about the work you have put in to actually build this trading system that makes you money. Don't be happy for the money, but be happy for the systems that you have built for yourself.